All right, guys, if you are looking to buy the PayPal stock, I would definitely watch this video first. I'm going to go over the chart and give you my thoughts of where the PayPal stock price is headed from here based off of the data being applied on the chart. I'm also going to go over my PayPal stock price prediction of what I think the stock is worth and where it could be headed over the next 2 years. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin and I am your host. In today's video, guys, we're going to talk about the PayPal stock. I have had a lot of people ask me if the bottom is in, if it's starting to reverse, if they just start averaging down, if it's time to buy. So I wanted to go over the technicals and give you my thoughts of where the PayPal stock price is headed from here based off of recent price action. All we can do, guys, is take a look at the data being presented to us and then make an educated guess of where it's headed. If you want to see a video where I break down PayPal's fundamentals and go do a full discounted free cash flow sheet, kind of come up with an intrinsic value of where I think the stock is valued at fundamentally and where I think the PayPal stock price could be headed based off fundamentals over the next 2 years, I will link that right here so you can check that out. Today, I'm just giving you an update on the PayPal stock chart so you know what you should be doing and what I'm doing in the next coming weeks based off what's happening, if you should be averaging down at these levels or if it's ready to head to lower prices because of, the key levels on the chart. So real quick, guys, before we get started, subscribe to the channel if you're new around here and want to see more videos like this. Come over and join us at the Patreon if you want to get all of our trade setups and day one squad. I love you. Thank you for your support, but let's get started. All right, guys. So what we're going to look at today, like I said, is the chart. This chart is looking pretty bad, man. Pretty bad, guys. I mean, we literally just broke the COVID crash low, and we are currently back testing it as resistance again. That's not good, guys. The last time we made a video on it, the stock was above the inflection zone, and unfortunately, it blew right past it, caught a reaction, and went back to test that level that was once resistance, resistance, resistance as resistance again. Guys, that is very, very bearish price action. You can see here. One thing I want to point out, guys, you can see we had the initial all-time high of July 2019, the initial all-time high from February 2020, right before the COVID crash. We dumped during COVID, sprung, back tested the level, and then rallied again. And we gapped right over the all-time highs from July 2019 and February 2020. And we never back tested that 119 to 124 level as support. So we gapped over it and we went on an insane rally. The party got started. We went to all-time highs. On the way back down, guys, it didn't even react at that level. Real thin order book, just straight through it, right back to that COVID level. Where it dumped, sprung, and then back tested the zone, which was also an initial all-time high from July of 2018. So very key level there at 92, 23, and 86 as well. But you bounced, you went back, tested it as resistance, and you dumped again. So not only did you make a lower high than the previous high, but you also back tested and confirmed to market participants a level that was once resistance in the past is certainly resistance again. Now you went back to create a second low at that 92.33 level and you broke it. And then what happened, guys? You back tested it as resistance, dumped again. So a level that was once support is now resistance again. So you dumped again and then you back tested the bottom of the zone as resistance that was once resistance again. So January 2018, that initial high, that's what you are currently back testing as resistance, again. So if you do not get back above that 86.32 level, you're probably headed to back down to 75.45. And if you break 75.45, guys, there's nothing in between there. I mean, look at this. There is nothing in between that until like $44. I mean, you've got little levels like 55.29, stuff like that. But overall, guys, if you don't get back above that, you're probably headed to much lower prices. I want to kind of show you something. If we jump over to the weekly, and we've got our fib levels, and we go from the COVID crash low to the all-time high. You can see the 113 right there at $52.36. What did I say? 55 bucks. After that, guys, the 1272, $20.38. Obviously, you do have the all-time low that could protect you, but that's like 29 bucks. And then you've got 4132, which was the initial high from back around the IPO date. So, guys, this is some pretty key levels right here. You have got to get back above that area. Take a look at your RSI on the weekly. The lowest levels that you have ever seen by a large margin, guys. I mean, 14 on the relative strength index. I mean, I will give you this. You are starting to create, I mean, you've got bullish divergence on your RSI. You are losing your negative momentum on the weekly. You are starting to build positive momentum. You've got bullish divergence. So you should catch some type of reaction here. And you've got a really nice start to a momentum shifting structure. You've got the left shoulder, you've got the head, you had a doji, at a key level. So you absolutely, could create a inverse head and shoulders here. And that would be pretty legendary, right? You react, you come back, you back test the neckline again, you come back to make a higher low than the previous low, and you run again. And then you break the neckline, you back test the neckline and support, and then now you're headed to higher prices. And then you can use your measured move of the structure to create your price target. And so then you've got something like this, guys, where you can then strategically take your trade and, feel pretty confident about it. Until I start seeing stuff like this, guys, it's very hard for me to want to take the trade because you just don't have anything implying that the bottom is in. When you just back tested two very key levels as resistance for, the first time in a, pretty long time, it's scary stuff. It's not good price action. So you've got to be careful. But this is the type of stuff that I would be looking for, again, because you did create that left shoulder and you're starting to round. So, who knows, maybe you are starting to bottom. But again, until you get back above 86.32, you just can't be bullish. You've got bullish divergence on both your oscillators on the daily as well. You did get out of the bearish control zone. You are testing that neutral zone on your RSI on the daily. So I just need to see more price action, guys. I got to see it get back above that level and start to head back to the 119, 124 area. If it doesn't do that, you're probably headed to lower prices. And if you cannot hold this area, guys, you are going to get devastated. So depending on what the macro does, I think will kind of determine what PayPal does. If you, you take a look, guys, you can see, I mean, what would be pretty legendary is you have the bullish divergence on your left shoulder and your head, which is what we look for. If you were to rally and follow this line here and come back to create that higher low on the right shoulder, you could create hidden bullish divergence that's already starting to set up, and that would create or imply a continuation to the upside, and that would just be, perfect. That would be exactly what you wanted to see. Guys, that I am just a big, Bulkowski, type guy. I read all of his books, and he always wants to see a momentum shifting structure at key levels to imply that the bottom is in or the trend is starting to change. But when you just broke, the COVID crash low and you're back testing key levels as resistance for the first time since, clear back in 2018, that's very, very bearish. That is not good price action, guys. We jump over to like the monthly time frame, and you can see, I mean, just getting absolutely devastated, guys, and you are currently below very key levels. I mean, you just closed an indecision candle for the month after a huge impulse candle down. So maybe you're in luck. You are starting to lose your negative momentum on the weekly for the first time since October of 2021. So who knows, guys? Maybe this is it. Maybe this is where the trend starts to change and you see this type of stuff develop, and then you can jump in and start making some pretty serious trade setups. I think though, guys, if this is the bottom, if it is going to start rounding and start making higher lows, I mean, you're likely going to see 179 like that. I mean, that's what I would think. I think over the next 2 years, $200 is the target because you get back above 124, 119, you back test it as support. You can see straight up, straight down. So you back test it as support and you run to 204 like that and you're off to the races. So let me know what you think down in the comments, guys. I'd love to hear your analysis or what you think about it. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come over and join us at the Patreon, and I'll see you guys in the next one. Peace.